Welcome to the daily update, where I'll go over the action in the market for Thursday, August 31st, and then we'll see how things are looking for Friday, September 1st. Happy new month. Starting to get near the early parts of fall, but we still have the unofficial end to the summer with Labor Day coming up. So just while I'm thinking about it, I hope everybody has a very happy and safe Labor Day weekend. We had a slight down day on Friday. We haven't really shifted anything. We're still looking more positive. In the short term, we're still looking a little overextended to the upside, but at the same time, we're not trending right now. So there's really not a lot to latch onto. We have the big employment situation report coming out on Friday. Depending on how the market reacts to that, will kind of determine where we go from here. But then we have this 3-day weekend. And then as folks are coming back from vacations and starting school and just enjoying the summer, the hope is that volume will pick up and the market will kind of go in whatever direction it wants to go. Right now, we are leaning more towards the positive side. We just haven't really developed into a trend yet. Please be aware that on Monday, September 4th, Labor Day, I will be teaching a 3-hour class where I'm going to go over my basic approach to technical analysis. I'll just be hitting at a high level some strategies that you might want to consider, and I'll also be talking about support and resistance. Now, the following week, I'll be doing the same class, but instead of doing it in one day, it'll be 1-hour sessions spread over 3 days. That's September 11th through the 13th. I intend to stream this on YouTube and Rumble. I've had some problems with that before. If that happens again this time, I will be using Zoom as a backup. All right, let's go back and talk about what happened. Right at the open, we had a higher open, not a real gap either way. Prices then rose above R1 at 45.26. As the day went on, prices fell back below R1, down to the unchanged level, went below that, and found support at the daily pivot. Prices then rose back to R1 before falling again to the unchanged level, and then closing slightly below the daily pivot. We were down 0.16%, but volume still continues to be below average. The technicals are switching back more positive, but that could change. A really good down day or significant down day, that could switch things back quickly. So we want to be on guard because we're in a non-trending environment right now. It's about inflation, interest rates, and growth concerns. Specifically, when it comes to growth concerns, it'll be about the employment situation report and then the ISM manufacturing that will be released on Friday. Some comments that we can make. Even though the S&P was down, the NASDAQ and the NASDAQ 100 did have slight up days. Atlanta Fed President Bostic, who is a voter coming up in 2024, said that he feels the Fed's monetary policy is appropriately restrictive. The market could have danced on that, but then he had to qualify it by saying, but that doesn't mean he's in favor of easing rates anytime soon. We're still worried about this current scenario. It's the idea that the economy is stronger than expected. And for a while there, we were getting stronger than expected economic reports. Well, that has shifted. And so the market, even though they're leaning towards this scenario, they're liking the reports that are coming out. Also, that the Fed will have to keep rates higher for longer. We have known that for quite a while, and that's been pretty consistent coming from the Fed. If we start to see stronger than expected economic reports coming out, it's a little more likely that the Fed may raise rates at their next meeting or at some point between now and the end of the year. Also, China is continuing to come out with weaker than expected economic reports, and that is a bit of a growth concern because so many U.S. companies do business with Chinese companies. On a short-term basis, we do have the CMB composite, the Stochh RSI, the Williams percent R, the CCI 14 and 20, as well as the stochastics. Those are giving us extreme positive readings, which I try to explain. We were chopping around for a little bit, not going in any real direction. And, and then we shot higher. And so these indicators, which are pretty touchy anyway, they gave us extreme positive readings quite quickly. Even with the slight down day on Thursday, it really didn't wear off any of that, and some of them are still looking extreme positive. And I'll go through and I'll show you these charts. The dollar was up and interest rates were down. The dollar being up, not very much, but that gave a little bit of headwinds. Interest rates being down gave a little bit of support to stocks. The yield curves that we follow are still inverted. Sentiment is neutral. It actually came in at 53 where it had been at 51. Our trend, it's positive. The green line is on top, but the ADX is weakening. It's below its moving average, and both in the short and intermediate term, the ADX is below 20, suggesting a non-trending environment with a positive bias. Speaking of bias, I did switch this back over to mixed because of the slight down day. And Friday, with being a pretty influential report, we're not really sure how things are going to move. And then momentum, though, I've still kept it positive because we had 4 up days in a row. The economic reports that did come out, we had the weekly jobless claims coming in at 175,000, weaker than the 235,000 they had expected, and down from the 232,000 that we had last time. This is suggesting that the employment situation is still strong. The continuing claims came in at 160. I'll show you the chart to see how that's coming along over time. Personal income was up 0.3% as expected, and the same as last time. Personal spending came in up 0.8%, a little more than the 0.7% that they had expected, and up from the 0.6% that we saw last time. So people aren't bringing in any more money, but they are spending more, according to this report. The PCE prices came in as expected at 0.2%. That's what we also saw last time. If you take the core PCE, and this is the one the Fed likes to really focus on, it came in as expected, up 0.2%, the same as what we saw last time. The Chicago PMI came in at 48.7, up from the 45 that we saw last time, but still under 50. When we're below 50, that shows contraction. If we get above 50, that shows expansion. Here is the personal income and spending year over year, where we did tick up a little bit when you calculate it out to an annual basis, where the spending, the blue line, is starting to go up, where the income is actually coming down. And then the PCE core inflation year over year, it also ticked up just a little bit after it had been coming down. The market could have freaked out on this news, but it chose not to do that. Personal spending month over month is showing an increase. And here's our chart that we look at, looking at the rate of change for the PCE index going back over the last 12 months. It is starting to turn back up. And when we go month over month, it's also increasing. Looking at the weekly jobless claims, where it is starting to decline, suggesting the employment situation is strong for right now. And here's the continuing claims, which are ticking up a little bit. So in the short term, we're looking strong. And if you project it out a bit, we're starting to show some more weakness. So here are all the different areas together. The red line is the initial claims, which are declining. The blue line are the continuing claims, which are starting to turn back up after they had been declining. And the last reading that we got on the unemployment rate was at 3.5%. That will be updated again in Friday's session. We're also keeping an eye on the average VIX from 1990 up to 2022. That's the blue line. And if we continue to follow that in 2023, the red line, the VIX will go up if we stick to that, which means that stocks are going down, and they continue to go down into about the middle to latter part of October. We don't know if we're going to stick to this or not, but this is just something we want to keep an eye on. Here's the intraday chart where we didn't have much of a change, at least a gap higher or lower. We quickly got up to R1. We went above that a little bit. We drifted sideways to down, went down below the unchanged level, hit the daily pivot, bounced up off of that, made it back up to R1, came down to the unchanged level, and then finished pretty much at the low for the day, slightly below the daily pivot. Growth didn't have all that good of a day. When you compare it to value and we take a ratio, we were under the unchanged level for the entire day. We showed a little bit of strength later in the day, only to come right back down and lose that strength. The VIX is continuing to decline on the line chart and the bar chart. but volatility is picking up a little bit. This might be somewhat because of the down day, and we didn't see a lot of real follow through upward action with price, and also coming out ahead of the employment situation report. So we're just seeing a little bit of a tick up after we had really been dropping off with this. We want to keep an eye on this, which this measures the volatility of the VIX. And because when we get to really low level readings, sometimes that can mean a real shift in the change for the VIX itself. Looking at our 5-period simple moving average of the equity put call ratio, we are continuing to come back down. So this could be positive for the market after giving us 2 extreme positive readings. Then looking at the VIX to VVIX ratio, this is still going up. It takes a while for this to shift. After we had been coming down, that was positive. The fact that we're turning back up is negative, and now we're going to watch this to see, will this ratio start to roll over and go back down? Longer term, we're also seeing where it had been declining, and now the equity put call ratio is going back up. Longer term, this is positive. We're looking at some shorter term weakness. We want to see if this is going to roll over and go down. We're seeing a little bit more of an improvement with our risk on versus risk off ratio, where we were going up throughout the month of July and late spring and early summer. Then we saw some weakness throughout August, and now we're seeing this ratio starting to go back up. So that is a little bit more positive. The Stochh RSI is still giving us an extreme positive reading. The Williams percent R is extreme positive. The CCI 14 and the CCI 20, which is just barely positive. This is the condition of our trend where we have the green line on top and it is advancing. However, the ADX is below its moving average, and both the ADX and its moving average are below 20. So in the intermediate term, that's suggesting that we're not in a trend yet. And we're seeing pretty much that same thing in the short term. We're trying to turn back up with the ADX, but we haven't crossed over the moving average. So that suggests we're trendless. But if anything, we would default to the positive because the green line is on top and advancing. The daily chart showing how we came up to this pivot level, and that's now acting as overhead resistance. If we get a report that the market likes, we'll be seeing if we can break above this pivot level and show some improvement. If we don't get a report that the market likes, then we will probably fall, and then we'll be looking at this pivot level. Or it could be just another lazy day in August where people just kind of yawn and don't do much. We did see a little bit of a pickup in volume, but overall we have been below average. Then looking at the stochastics, and getting back to this, the reason why this picked up in volume is it was the last trading day of the month. Looking at the stochastics, we're still extreme positive in the short term. We're getting extreme positive in the intermediate short term and showing more improvement and almost turning positive in the long short term. Looking at our 20-period double and triple exponential moving averages, we are above both. These are starting to turn back up. If we see the green line cross above the blue line, that would turn things more positive in the short term. In the intermediate term, we're still above the blue line of the double and triple exponential moving averages. This may be providing support, but we really didn't move all that much in Thursday's session. If we stay above this and then eventually see the red line cross above the blue line, that would turn things more positive. The CMB composite is still giving us an extreme positive reading. The summation index based on price continues to go up as well as volume. The summation index for the NYSE, which is a broader measure, it's turning up still based on price and volume. The mass index, we came up to this blue line and now we're starting to come down, and we're a little bit confused here because usually we go well above the blue line and then start to come back down. We're trying to figure out, does this count? If this goes back up, we'll see if it goes further above the blue line. If it continues to come down, we'll treat that as kind of a signal. And what the signal tries to show us is a change in trend. Then looking at the PMO, we're showing a lot of improvement with our oscillators. The PMO is now crossing over positive, just getting barely above its moving average, where we were already positive based on price and volume. The Swenlin trading oscillator also showing improvement and advancing and not at an extreme reading. This is a more intermediate term chart. We're seeing some improvement here with the ease of movement. This tries to measure the path of least resistance. We were headed down throughout the month of August, and now we're starting to come back up and have crossed above zero. The advanced decline line ticked down a little bit based on price and volume. Well, we were pretty much flat based on volume, but we're still above the moving averages. So this is holding up. We're also seeing an improvement with the new highs. We're seeing more new highs than new lows. And so we're turning up with our 5-period and our 10-period moving averages. So this shows that there's some more internal strength that happening, at least right now, in the S&P. We're also ticking down a little bit, but still positive with the advanced decline ratio. Accumulation distribution did come down, but it's coming down to the moving average. This is kind of critical too. If we have an up day, we'll want to see this blue line turn back up above the moving average. If we drop below this, that would shift things more negative as we're trying to analyze what is the smart money doing. The regular advanced decline line for the NYSE is coming back above this upward sloping trend line. That's showing improvement. The shaken money flow, after it had turned positive, has now dropped back down below zero. This is a bit of a warning sign. We want to see if we can recoup from this level. Now, again, because it was the last trading day of the month, you had some of the smart money jockeying some things around, and we don't know, is that a one-day wonder because it was the end of the month, or is that the beginning of something that's going to actually switch? Here's our oscillators showing the short-term oscillators are going up. We're starting to cross over positive with our intermediate-term oscillators, and we're turning up but haven't quite crossed the moving averages with our long-term oscillators. We're still above all the moving averages in the moving average tree, and the longer that we stay above this, the more the 20 periods will start to turn and go back up. If we fall, we'll be looking at one of these moving averages as possible support. We're also right about on the intermediate term trend line. We closed just barely above this line after Wednesday. We came down right to the line on Thursday. So this is just really suggesting a tipping point for the market right now. If we get an up day, we'll probably go above this line. If we get a down day, we'll end up being below it. The MACD on a longer term basis showing on a weekly chart, we're still negative here. We still have 1 day left in the trading week, which will actually print the value for this indicator. If we have an up day, it might show some improvement, but right now we're still looking more negative. The growth to value ratio for the S&P, it was actually down as we're chopping sideways in the short to intermediate term, but we continue to be in an uptrend in the long term. The Dow is also running into overhead resistance at this pivot level and closed right about at the new pivot level that will start to follow for September. The NASDAQ 100 also came up to this pivot level, acting as overhead resistance, and then closed down below it, even though it did have an up day. We are showing improvement with the NASDAQ 100 on a momentum basis. The PPO is crossed above its moving average and starting to slowly come back above zero, so that could be positive. The NASDAQ also came up to this pivot level and then closed down below that, even though it finished positive on the day. We're keeping an eye on the fib levels for the NASDAQ. We're still above the 61.8% retracement level. If we continue to go up, we'll leave that behind us. If we start to fall, we'll be looking at this as possible support. The FANG index continues to hang out above its 50-period moving average and is in a longer-term uptrend. The small caps also hitting resistance at this pivot level, looking better after giving us a recent golden cross, but having some pretty significant overhead resistance currently. Here's a look at the Russell 2000. Turned down a little bit with the RSI, but we're still above 50. Came up to the moving average, the 50-period moving average, and that's acting as resistance as we came down below that. However, the MACD is crossing over positive and is looking better. Haven't shown this in a while. This is the ratio between the S&P 500, the weighted index, and the equal weight index, where the big boys are doing better, and so that's why we're seeing this ratio continuing to go up. The mid caps are just a little bit above their 50-period moving average. We're right about at this pivot level right now, which currently is acting as support. If we fall below this, then we would lose that support. If we go up, then we have another pivot level to focus on. Yields did come down in Thursday's session on the 10-year and prices going up. We're still working off of a recent death cross. However, the RSI is above 50. That's positive. And the MACD is also turning more positive. So what's our outlook for Friday? We will get earnings reports that will be released. The markets will be closed on Monday in observance of Labor Day. The technicals are positive, but we're still continuing to be overbought in the short term, and we're not trending right now. We will get the employment situation report, the S&P Global US Manufacturing PMI, the final reading, not really influential, construction spending, as well as the ISM manufacturing. It's the employment situation and the ISM that'll be the big impacts for Friday's session. Keeping an eye on the geopolitical events, but it's about inflation and interest rates and growth concerns. Here's the last trading day of the week, showing you the economic calendar. And then we have the new statistics for September for the Stock Traders Almanac, where the last 71 years, we tend to be up 41% of the time, but we're down 54.9% of the time. So September tends to have some weakness. I won't go through the options expiration because that's still a number of weeks out. But looking at September 1st, we're neutral to negative with the Dow and S&P, where we're neutral to positive with the NASDAQ. And then wondering if we're going to see a little more follow through positive action as we're coming out this pre-election cycle year. And then also wondering about that for the NASDAQ, where it looks like we finally hit some kind of a bottom and we've been seeing some improvement. Will that carry over into September? And then looking at the S&P, also, we might see some initial weakness when we look at the green line, but then we tend to see some strength going forward. And I'm still waiting for updated versions of these charts. So these are still the charts that I've been showing. I do have one new chart here going back to 1950 with pre-election years. It's not very good. The S&P is only up 33.33% of the time in the month of September. So our scenarios, not going with the down one now, we're switching over to a more positive stance, even though we're overbought in the short term and we're not really trending. If we were to lean to something, it would be to the positive side, but beware, we're not trending right now. You could also tend to focus more on the sideways trend if you implement those kinds of strategies, because both the short and intermediate term ADX are below 20, and both of them are below their moving averages, even though the short term is trying to turn back up. However, we would default to positive because the green line is on top for both. The warning signs, we're wondering if these bearish short-term and even intermediate-term signals are finally finished. We can pretty much say that, but I'm just waiting until after Friday's session to decide whether to take this off the list right here. The longer-term trend signals may be signaling a top. I haven't shown that chart in a while. We're still below those long-term trend lines with the NASDAQ 100 and the S&P 500. We're in a weak month. We're just coming out of a weak month where we tend to see some positive action later in the month, but now we're coming into another weak month. Is this finally going to continue? Will we see some follow through with this? The equity put call ratio is spiking up, but now it's starting to turn down. So the fact that it's spiking up is a warning that it's turning down could be turning more positive. The cumulative new highs, new lows for the NASDAQ are showing weakness. The 3-month yield is still above where it was at back in 2007 and not really rolling over yet, and then dealing with earnings season as reports are released. On the positive side, we have seasonality and setups that are still in the background, and I'll be covering those as I go through the weekly video. The long-term daily special K chart is positive. The weekly chart is still negative. The longer-term equity put call ratio has been declining, but it's turning back up. We're wondering if that's going to roll back over. The S&P is still above the downtrend channel upper line. The risk on posture seems to be improving. The S&P 500 oscillators in the short and intermediate term, they're turning up. Longer term, they're looking better, but have not crossed positive. The NASDAQ 100 oscillator that we've been watching is turning more positive. The S&P is outperforming utilities, and the Staples to S&P 500 ratio continues to decline. Both of these together often give good support to the S&P. But we saw that throughout pretty much the entire month of August, and it really didn't have that big of an impact. The small caps, the Russell, the mid caps are still working off of recent golden crosses. Small and mid cap growth, it's been chopping sideways, but it's still in an overall uptrend. The financial sector is still working off of a recent golden cross. The parabolic SAR daily chart is positive. The Copic curve generated a signal a few days ago that's positive. And then our conclusion, we're turning more positive. We're slightly overbought in the short term because these indicators have more room to run to the upside. In the short term, we're positive, but slightly overbought. Intermediate term, turning positive, but we're not trending right now, but we continue to be positive in the long term. So thank you. I hope you found this helpful. Have a really good day on Friday, and I will talk to you in the next video.